Welcome to the end of day review for Thursday, the 7th of March 2024. Starting off with the economic calendar, we had two red folder news in the New York session, which were of significance. However, what I did mention in my London outlook was that I wasn't willing to take New York based trades because Powell talks in the middle of the session and we don't know what he's going to say. In addition to this, price usually doesn't move enough to enable us to close with profits or break even at that time. So what my objective was if I got into any London trades, I would have managed them accordingly to this initial news release and closed them by the time of this testimony. And that's precisely what had happened. So I'll explain or go through the charts, and then we can understand what had happened or transpired for the day. At the beginning of the day, today was the fifth potential bearish day, having four consecutive bullish candles, at which point there's almost like a 90 to 100% chance that this is going to be a 90 to 95% chance that this is going to be a bearish day, and thus for that reason our daily bias was shorts rather than longs. And that made a lot of sense in context with what we understood from the 4H perspective, giving us a higher time frame narrative. So from a market structure perspective, we understand that we had our change of character and a break of structure to validate the bearish market trend. And then in addition to that, we had to interpret order flow with a large complex pullback, and essentially what we concluded is that the pullback primary leg was extended, from which point the pullback phase last point of supply was identified right here. The pro-trend extreme poses a barrier for shorting, for counter trend longs, and thus in order to trade long our target has to be the substructure high, provided we have internal range liquidity and appropriate backing. The pullback last point of supply poses no barrier to the pro-trend extreme because the high probability move is that we actually do move to the downside. However, having said that, today that narrative didn't materialize and I got the daily direction wrong, which is normal. We can't be right all the time. So, excuse me. So essentially, how I approached the day was purely from a shorting perspective. I was trying to identify where I could take short. So the first opportunity presented when Frankfurt took out the Asia range high, after which Frankfurt high of the day was validated. As you can see, London broke the Frankfurt range. We had a change of character and we essentially validated a small intraday leg right there, and that gave us reasons to short because we have Asia liquidity right here, and there's often chances that price will pull back range a little bit and then go and target this. My break-even point is the Asia range rather than the normal break-even point that would have been in and around this area. However, that subsequently failed, and then after that we actually had another short idea to get into trades in the London session, and that was based on the idea that we have this daily bias. We also have a new leg that has formed from the previous day high to the extreme, and we anchored our fib such that we made this position able to reach a 1 to 3 by the time of reaching, well, essentially by the time of reaching 70% of the daily range. March's daily range has been around 60 pips, and for this reason this is 70% of that, and the stop loss ensures that we can achieve a 1 to 3 by this point. My break-even point for this trade was again here, and as you can see price ranged around quite a lot, and it's probably because of the Powell testimony that comes up. Also, the red folder news at 3:30 p.m. was neutral, and thus it didn't really give us the fuel we needed to push downwards. So we were in a neutral state. We had a lot of factors supporting why we should short, so it didn't make sense to close this trade out early. It's rather made sense to leave it open and at least try and get out break even or with a little profit when 5 p.m. hits. But as you can see, we got taken out at 16:35, so about 25 minutes before the testimony. And yeah, and as you can see, price is continuing to push to the upside. So we'll evaluate tomorrow to assess if we body break the swing structure to indicate that we back in an uncertain scenario or not. But that remains to be seen. So having said all of that, I hope you had a good productive day, irrespective of whether you took wins or losses. Remember, losses are absolutely part of the game. They cannot be ignored or avoided, and thus you shouldn't let few losses in a row tilt you emotionally. You should instead unpack your data, understand what the potential max potential drawdown is. I find equity simulators quite useful in that regard. Understanding that large losing streaks is always a probability. I mean, even at a 60% win rate, um, losing streaks of anywhere between 4 and 10 or even 12 in a row is possible. So having said all of that, you need to keep all those factors in mind. Obviously, you need to apply a dynamic risk um, management protocol so that you keep your accounts that you are managing. But this is just part of the game. I hope you enjoyed the end of day review, and we'll chat again for the London Outlook tomorrow.